Have you seen how much money Tether is earning?
How much is it?
Oh my, that's crazy amount. Just look at this report that I'm going through right now. This is the XLF ETF. This is basically the financial sector of the S&P 500 list, and
Mm-hmm.
this is the look at the companies and how much money they
Okay.
are making.
Yeah.
This is basically just by holding U.S. Treasuries. You have like Berkshire Hathaway's, J.P. Morgan's, Bank of
Mm-hmm.
America, and then
Tether
if you
has made
go,
it to the
if you come
list.
down, yeah, exactly. Tether has made it to the list, and how have they made it? They are basically they have 150 billion in reserves. Of that, let's
Mm-hmm.
say about 100 million is in either in US Treasuries, US money market fund, reverse repos, something or the other, and they are making like pre-tax they're making about 11 $12 billion just by holding
Jeez.
onto these assets. This is not even this is the not business profit. This isn't coming from any transaction fees or anything like that. This is purely just by holding on to these assets, that's all. So that is like we will see more and more stablecoin issuers who
Mm-hmm.
get to this amounts of reserve, like who cross the 100 billion in reserves. For example, USDC Circle is right around 61 $62 billion.
Yeah.
Just by holding on to these US treasuries, the profit you make is substantial, and that's just it's like a business where you cannot simply lose. The reserve requirement here is so high, you have to be always
Mm-hmm.
one to one pegged, right? That means your asset has to
Yeah.
be slightly greater than the liabilities, and boom, you make this amount of money. You are making 11 $12 billion doing nothing. Business profits
Right.
comes after. This is purely from yields on UST bills less than 90 days maturity. you
I
know
see.
and actually this report has got a bunch of similar, how should I put it, a bunch of like gold mine of data on the stablecoin market.
Mm-hmm.
This is actually published by Messari. This is their State of Stablecoin report that came out earlier this week, I think 22nd of July. And I have been going through this report like crazy. All of the information that I am getting,
Mm-hmm.
obviously a lot of them we have already discussed, and it's good to see the actual real hard data coming from like industry experts from
Right.
Messari. Right, so I want to go through five key observations that I'm seeing, like five key insights from this Messari report, and I just want to
Mm-hmm.
basically walk you through step by step through these five, maybe six, if six of the key insights that I find interesting. Obviously, this is a 128 pages reports, completely packed with useful information.
Right.
So
Mm-hmm.
yeah, but these five are what I found the most interesting from my perspective and what I want to see in the stablecoin payments industry. So let's just go through them one by one. Okay. So
Yep.
number one is, as we have discussed multiple times, like remittance fees.
Remittances.
Yeah, remittance fees are crazy right now. Not right now. It has always been crazy. Whenever you are using traditional finance legacy
Mm-hmm.
infrastructure, they just rip you apart, and
Yeah.
not even ripping you off. It's basically ripping you apart with all of the fees that they will charge you. Like here they're using the example of a $200 remittance,
Mm-hmm.
and the fees you are looking at, on average you are looking at 6.3% of fees worldwide, but in some cases the fees goes as high as 16-17%. Imagine paying
Jeez.
$30. Yeah, exactly. Imagine paying $30 in remittance fee on a $200 payments. That's even before you have paid any taxes.
All the excitement dies down when you receive it.
Yeah, exactly.
And also there is the issue of timing, right? Not all, you won't receive money instantly.
Oh yeah, absolutely. Like depending on which country, what's the origin of the transaction and which country it is going to. Some payments takes like some payments come within a day. Some payments take three,
Yeah,
4, 5 days. Like I remember,
exactly.
yeah, I remember using platforms like Western Union or Stripe. Uh,
Mm-hmm.
not Stripe. Never really used that much of a Stripe, but like TransferWise, which is now just Wise, and it took me it took them 3 to 4 days to send me the entire amount, and then when it comes, again the fees, like
Yeah. Right.
there is the
First
general
you wait
remittance.
for it, then you don't even receive the full amount. There's
Yeah,
all
yeah,
these
yeah.
transaction fees.
Yeah, exactly. There is the forex fee, then there is the transfer fee, there is the intermediary fee that the banks will charge you, At the end of the day, it just makes you angry. It makes you hope, almost like helpless, that I am a hostage to this financial infrastructure and I have no other option. But thankfully,
Mm,
the option is a stable coin is present to us. And not only stable coins, even if you are not using stable coins directly, or basically you're not super familiar with the entire decentralized infrastructure, there is obviously centralized methods through which you can go. And not only just using crypto exchanges, which are primarily the platform that facilitate these P2P transactions. Now Circle is actually coming up with this system called the Circle Payments Network. What they're essentially doing is they are acting as the middleman between the sending bank and the receiving bank. So here's what Circle is building and why this is actually interesting. So imagine you are sending money to a friend, and you are
mhm.
you are doing it through the traditional banking infrastructure, obviously, because your friend doesn't really have a very good understanding of stablecoins. Don't use it, let's just
Right.
say. But Circle comes in between, and they convert your payment into stable coins that then go to the receiving bank, relay the transaction there, they intercept it, then they convert it back to fiat, and your friend receives it actually much faster and with a much lower transaction fee. Now, obviously, this isn't the perfect system. Like, we are not there when banks can natively process stablecoin transactions.
I
So
see.
what this is essentially a patchwork. Like I use this example a lot. When petroleum started getting popular as
Mhm.
a fuel, what steamships or locomotives, like trains will do is, instead of using coals for steam engines, they still did not have the internal combustion engine that will directly use gasoline as fuel or petrol as fuel. What they will do is, instead of burning the coal to heat up the steam engine, they will burn petroleum, which is much more efficient and much more
Ah.
cheaper, much more easy to source than coal. So again, they did not have the internal combustion system. They did not have the natively integrated system that will make everything super easy. But they found the next best thing, which was they replaced an inefficient, expensive, hard to move material with a much better, much with a much more efficient fuel. And this
And
is
you can
exactly
always
the current.
refine it going forward.
Yeah, you can always refine it, iterate it a bit more every day. And very in the near future, banks will soon be using completely native stablecoin
Mhm.
infrastructure. The speed of innovation in the stablecoin industry, it's lightning fast. So we are going to see a shitload of
Like we
innovation.
talk about it every week, and even me, I just keep seeing like immense amount of progress.
Yes, exactly. Yeah, so that's our point number one. Moving on to point number two, which this is actually another topic that we discussed in the last episode, that stable coins are so much in demand in emerging markets with a weak,
Yeah,
unstable
weaker
economy and a
currency.
weaker currency, that people will pay more for $1. Like
Yeah,
people are willing to pay a premium to use the same dollar, just because they're losing more
because
money
of
when
their
they're
unstable currency. Yeah.
yeah, exactly. Because the currency that they're using is so unstable that it's worth paying more for the same uh, $1 worth of value, because dollar isn't losing its value overnight. And so this is the premium that some countries are paying against the foreign exchange rate set by the central banks of these countries. So, like, for example, this is the ruble in Russia.
Hmm.
The green one is the USDT and the blue one is USDC. In Russia, some people are paying over like 15% premium on USDTs and about 4 5% premium on USDCs. And it's the same case more or less in most of the emerging markets. Like, you have the rubles, you have the Nigerian naira, Chinese yuan, Indian rupees, Vietnamese dong, and it just keeps going on and on. And
Hmm.
so again, this just shows the supply and demand dynamics very clearly. People are willing
Yeah,
to pay more for
pay
the
more.
same dollars. Yeah. And this also shows you the product market fit that stablecoins have. Like if anyone has any questions about stablecoins are useless, well, look at this chart, and like these are
Right.
not criminals. These are not people who are laundering money. These are real people transacting in real dollars, because for whatever reason, either they have for in case of Russia, the primary reason for them using stablecoins or having such a demand for stablecoin is they have the amount of sanctions that they have got
Yeah.
issued by the United States, issued by European Union. So it's just their way of circumnavigating the financial system and accessing the same uh, I don't know, goods, services, savings, whatever you call it, through stable coins. Yeah, so that's what we are looking at. Moving on to point number three, another very interesting one, which is payments, or stablecoin card payments. Stablecoin card
Okay.
payments, yeah. So just to give you an understanding of what the stablecoin card market looks like, payment card, basically your Visa, your debit cards, and other things. Let
Mm-hmm.
me just start with the total addressable market in the card market. So Visa estimates that the total addressable consumer payment market to be at least 41 trillion.
41 trillion. Damn.
And that is that is an immense market size. Of that
Right.
41 trillion, they already control 18 trillion. So this 18 trillion can already be served with one or the other type of stablecoin rails. Like we are not talking about replacing Visa or Mastercard. We are simply saying like Visa or Mastercard adopting stablecoin technologies and replacing
Ah.
their fiat level dollars with stablecoin dollars. So Visa still gets to remain Visa. They still get to keep their market size and compete with other issuers. But instead of using the legacy infrastructure, they use stablecoin infrastructure, and we get instant access to $18 trillion dollar worth of a market. And on top of that, there is another $23 trillion of global market that are not on Visa, Mastercard, or any other kind of cards. These are the people who are doing like account to account transfers, who are doing bank transfers, or simply dealing in cash and check. That's
Ah,
a,
I
that's
see.
a $23 trillion market. Now, I remind you, like here in the footnote, it says excluding China and Russian markets. Now, imagine if you include China
Yeah,
and
of
Russian
course.
markets, it probably bumps the number by another couple of $1 trillion, right? So the market is huge for cards, and we are going to see more and more innovations on the card side of things. Like right now, we are looking at a rapid growth in card payments. Okay, wait a minute. Okay,
Yeah,
this is
do
super
it again.
confusing for me because there are just too many pages that I have to uh, scroll through, because some of the information are in one page and then there is another page. Anyways, the next piece of information has page is at page 33. And like the innovation in the card side of the business is going on fantastically. Like for example, there is like Stripe and other companies like Rain are making it simple to tap into Visa's merchant network through stablecoin backed cards. So this is something that is real, and this is something that is happening right now. Companies are using
Okay.
Visa's network and replacing the technology with stablecoin technology, and then voila, you have access to stablecoins, and you can directly spend your crypto through your Visa or through your Mastercard or any other card that you are using.
Ah,
And just to show you the market growth here, like beginning of 2023, the market was at about
it
200 crore.
started in 2023, so 2 years ago.
Yeah. Like before that, the market was even at a negligible payment volumes, and right now we are approaching
The growth
1.1
has been
billion.
immense.
Yeah, it's
Jeez.
like, yeah. So as you can see here, it's a 3.7x growth over 2 years. So 3.7x over 2 years. That's just a phenomenal amount of
Exactly.
phenomenal amount of development and innovation. Uh, Actually, I want to show you one more thing, and this is from a different report, which uh, Artemis, Dragonfly, and Castlelight and Fincher did it a few
Mm-hmm.
months ago. We actually covered it in our first ever episode, which was like, what the hell are
Mm.
stablecoins? In that episode, we covered like what is the market side of the stablecoin payments, and what they found out. Like this was a limited survey. They surveyed a limited amount of businesses and over analyzed a limited number of payments. But from what we can see, monthly payments, in like November, December, or January, February of 2025, monthly payment in stablecoins was at around $6 to $7 billion. This is just monthly payments using stablecoins. Imagine the potential growth that we are looking
Right.
at in the next few years. We are easily looking at $2 to $3 trillion in stablecoin volumes by the end of this decade.
Jeez, that's amazing. It's like, I did not even have any idea that there is so much potential, and because it's not talked about in the mainstream, I think it's because you come from the crypto space, so you must be more in touch with it. But I did not even realize this is how big the opportunity is.
Yeah, exactly. I mean, mainstream only gets air of it when things have gotten sufficiently large and
Yeah,
we have gotten like
very
sufficient,
true.
received sufficient validity from the traditional market, right? The thing is, like, the traditional finance market has gotten so interested in it that pretty much every financial investor are now looking into stable coins. Every financial institutions, asset managers, they are now looking in, either considering investing in stablecoins and payment technologies, or integrating with
Hmm.
stablecoins technologies, tokenizing their assets. It's right now the hottest thing in the finance market, either in traditional finance or in crypto. All right, now moving on to number four, which is another topic that we have discussed endlessly in this podcast, which is that United States government is
Ah,
extremely interested in stablecoin payments, and they are extremely interested in tokenization. So let's just go through some of the data that they have covered in this report. One of them being how stablecoins transactions and as well as issuers actually help the U.S. economy. So this is something that we are looking at. This is a research from the Bank of International Settlements, and they say a multi-billion-dollar weekly inflow into stablecoins is linked with a 2.5 basis point drop in 3 month Treasury bill yields after 10 days, and upward of 5 basis points reduction after 20 days. So that means, in simple terms, whenever stablecoin issuers are buying a boatload of T-bills, the
hmm.
the yield that they have to pay goes down by 3 to 5%, 3 to 5 bps. Yeah, just for reminder, one bps is like 0.01%.
Ah,
So basically 0.5 bps is 0.05%, which doesn't like look like a lot, but in a market where the maximum interest that you can possibly imagine in a stable market is 5%, 0.05% is 10% of that.
right.
So it's a pretty big deal. And the opposite is obviously true as well. Like, for some reason, if a stablecoin issuer is in trouble and they have to sell a whole chunk of US treasuries to meet some kind of payment obligations, then the yield goes up because someone has dumped in the market, right? So slowly and more every day, stablecoin issuers are becoming a dominant voice and a dominant player in the US treasury market. So much so that Circle and Tether are now one of the top holders of US treasuries.
Hmm.
100, they hold together about 182 billion dollars worth of,
2.4, yeah.
yeah, $182.4 billion worth of US treasuries, and that places them actually 17th globally. Imagine that, like, uh, yeah, every single country buys some amount of US treasuries because they want a robust uh, asset reserve, and they're
Hmm.
just they're just US, like, two companies are competing with countries in terms of their reserve of US treasuries. So again, these are all signals that clearly shows where the
Yeah.
stablecoin industry is going and why it's worth talking about, why it's worth making a fuss about. Uh, while we are on the subject of stablecoin yields and US treasuries, let's just now go to our point number five, and the final point of the day that I'm super excited about, and that is tokenized money market funds. Tokenized money market funds, for those who don't know, is simply someone is buying US treasuries and then they are reissuing that US treasury on chain, to the extent that
Hmm.
now you can buy US treasuries with stable coins. So you no longer have to go through the legacy infrastructure, follow access the United States financial market through
Right.
whatever tracks that they had previously. Now you can simply log in, go to Biddle or go to
Yeah.
Benji.
It's so
The
seamless.
Yeah, exactly, and you get to transact with, you get to buy US treasuries with your stable coins. Like the biggest one so far we have got is Biddle by BlackRock. The market cap
Mm,
is at about 2.8 billion. Then comes Franklin Templeton's Benji, which is about at 800 million, and that number is just growing enormously day after day. So much so, like we are the total tokenized money market fund size is at about $7.5 billion. And again, this is just in 2025. Genius Act has passed, and then it will, once it's formalized and properly implemented, sometimes either this year or early next year, then companies are just going
right.
to jump in, and this number is going to like 10x over the next few years. So just to show you how this whole thing works, um, so this is a step-by-step breakdown of how the entire process works. I don't want to go through the details so much, but just to give you an understanding of how a money market fund behaves. When you invest in a money market fund is an extremely
Hmm.
low risk asset. Like a money market fund will hold, mostly it will hold treasuries, and it will hold mortgage backed securities, something that we can discuss later, definitely not relevant to this podcast.
Hmm.
But these are extremely like low risk asset classes, and you are not really swing at any you are not looking at any major swings or volatility in a stable market. But what's interesting in the nature of how like the asset value is denominated, it's that the net asset value of the money market fund will always be at $1. So imagine you
Yeah.
buy a stock, and the stock's value is at $1. Doesn't matter how much money the stock is making, the value will always be $1, and whatever profit you are making, it will just be credited to you at the end of the day or at the end of the month. So whatever yield you are accruing, it will be disbursed to you on a frequent basis, so that the net asset value remains at $1.
I think in the page that you're in, it's saying that yield accrues daily at 3 p.m. So,
Yes, yes, it accrues daily at 3 p.m., and then it's paid out monthly. So that is the structure of how this brittle fund works. Like your portfolio will show that you're getting paid yields every day, but the total amount
mm,
of yield that you are earning, Biddle will transfer it to your account at the
at
end of
the
every month,
month.
not every
Yeah.
day. Yeah, so these are the top 5 points. These are like the key insights that I was super excited to talk about. Um,
Hmm.
and again, like it's undeniable that the rate of innovation we are looking at, like the rate of development in this industry that we are looking at, it's completely bonkers. Like it's
Right.
just like we are going up at a 60-degree angle. It's just pure upward trajectory. Nothing is stopping us from this point.
The more I learn about this space and the more episodes I'm joining in, I believe like people are only talking about AI and everyone is focusing there. Like even people who don't understand, they look at the news, they will look at AI, but no one is looking at crypto space or stable coins. That the amount of change that it will bring in the day to day.
Yeah, I mean, look, the reason everyone talks about AI so much is because it's something that is directly affecting your life and something that you can benefit from directly.
Mm,
But I mean, honestly, most people are broke, so they don't want to talk about
right,
how billion-dollar funds are moving their
right.
money through these complicated webs of systems that they have. ChatGPT affects them directly. But whenever like this is a bit of a niche topic, like you only want to think about it when you are receiving foreign payments from a foreign country, and you are
And I
looking
don't
through
think
all of
that's
these
a reality
shenanigans.
for many people.
Yeah, exactly. Like very few people, especially in countries like India, Nigeria,
Mm-hmm.
Philippines, like very few people are actually receiving for payments from foreign countries, and so you don't want to think about it. But when you actually face these issues, then you think like, oh my God, this is a torture. We need to do something about it.
Right.
Like someone should do something about it, and this is someone who is doing something about it in stablecoins. So
Yeah.
some innovations that happens completely silently, you don't even know. You turn up someday and see, wow, like everything is happening so magically. And then some innovations that are just completely everyone feels it every second of the day, just like ChatGPT. Like
Mm-hmm.
I'm using ChatGPT 2-3 hours every day.
Yeah, same.
Yeah, it's immensely helpful.
It's my most used app on my phone.
Yeah, yeah, exactly. So, like different, some things retail will be more excited about, some things like big money people will be more
Mm,
excited about. But
exactly.
all right, I think this is a good time to end it. We have kept it short and simple, and
Yeah.
this was definitely an unscheduled event. We do our
Yeah.
episodes like one episode a week. This is the first week that we are doing two episodes back to back. So everyone, thanks for joining in.